You can see that that's only within 10 cents of the top end of the zone of 180.20, and all we needed to do at that point was look for a buy trigger. And on that particular setup, I mean, this was a really good one. They don't all work this way. We ended up having a $29 rally from that support decision. Now, to give you an idea of what you do with that, okay, so let's say you had the trade set up and you knew that we had support here. I took it down to a 30-minute chart because I want to show you how you trigger into a trade like that, okay? You look at the support on the, or you can see where it came into the support on the 30-minute chart. And there are two things that I want to see before you would enter the trade. I want to see it take out a prior swing high to indicate a reversal against the support, okay, that we came into. And I also want to see a confirmation with a moving average crossover. And I'm using the 8 over the 34 EMA for a swing trade. For the aggressive entry, you can use a 15-minute chart. For the not so aggressive entry, we use a 30-minute chart. Okay, so you can see once both of these things took place, so you took out a prior swing high and you had the moving average crossover, then you knew that it was okay to look at an entry in Amazon and place your stop underneath the low that was made prior to the buy trigger. So the stop would end up going in below the low that was made at 180.30. Okay. All right, let's take a look at another trade setup that we had. Now, this is an example of another price cluster decision, but this is where we actually ended up holding at the top end of this zone. But one of the reasons why this trade setup looked so good is that we had time symmetry. Okay, so I'm getting a little bit ahead of the game here, but this is just such a great example. We had a setup where I took these prior declines and noticed that this decline here was 24 trading bars, and this decline was 23 trading bars. And as we were trading down into support, I noticed that the time was very similar. Okay, so you can also use Fibonacci on the time axis of the market. This is actually a cluster of time cycles that you can see with the histogram that came together at the same time that we had this beautiful time count and a test of key support. And basically we triggered a trade off of this price cluster zone using a 15-minute chart. Okay, this was a 120-minute chart, which is where the trade setup showed up. And then the trigger was on a 15-minute chart. And that one, this is an example of the 15-minute chart. So you can go back over this. I believe that, I think, Paul, you're going to make the slides available to everybody, because what you can do is you can go back and look over where it would have triggered. Here we're trading down into the decision. And once you saw the moving average crossover, which was right here, and you had also already taken out a prior swing high, then you would have had your entry in Netflix. Okay, this was, a while back, and I won't tell you that I knew that we were going to get this kind of a move off of it, because we saw a $19.80 rally off of it. I actually got out when we made the first targets here. Okay, but that is where you can make a case for, if you get involved in a trade like this, try and keep a runner, because it can just keep going for you. Okay, this next example is in the stock LO. Now, here's where I'm going to show you where symmetry shows up. If you look over at the left-hand side of the chart, I'm marking where one of the prior declines was $20.40. And I projected that $20.40 from the high made in April. And that ended up being part of the price support cluster zone. Okay, so the first area that stood out was 117.69 to 119.07. and it included symmetry. The larger pattern was still in an uptrend, so that's why I was looking at the buy side. And we knew that if this last low held, that the target for the trade setup was going to be this 144.36 area. So your risk was going to be just underneath this cluster zone. So you might have risked, well, maybe in the stock outright, maybe it's a couple bucks. Also, you can look at option strategies there. And the potential reward was very healthy compared to the amount of risk that you would have taken on this trade setup. This next chart, again, another example of a trigger. So again, here's LO. Here's a 30-minute chart. What you want to do, since you want to see a trigger entry relatively close to the zone that you want to place your risk against, that's why we go to a lower time frame chart, because that is where you're going to see the quickest triggers. So here's a prior swing high here, and here's a confirmation with the moving average crossover. So again, right around here, it was okay to look at the buy side. If you didn't want to take the first trigger or crossover, you can look for the pullback. That's another way to enter. You can look for a pullback after the breakout. Okay, but this one gave us, actually the most updated chart shows that we had rallied about $22 off of this price cluster zone, okay, where the risk was just this much and the reward was pretty healthy. Okay, so about 22 bucks. This one did not make the target. It did have a $22 rally, but did not make the target. And what I ended up doing was recreating a new setup that's in my update tonight. Another thing that you need to do with these setups, since we don't always make the targets, is to trail a stop as you go along. Now, as far as questions, I'm going to take those after I finish the presentation. All right, I want to show you an example of when it doesn't work. Now here, I had a really nice setup in Apple. We had some good solid support. You know, Apple was bulletproof at that time. So just to show you, we did see an initial rally off of this area. So if you were triggered in, depending on what time frame you would use for an entry, you would have been stopped out when it took out this prior swing low. That's where your risk would have been defined. Okay, so there's going to be a ton of these that the market blows through every day. Just be aware of that. As far as another example with some of these timing considerations, I really like these a lot because I've found them to work also on the intraday charts. But if you get something on a daily chart, this was a really good one. This was in the newsletter before it happened. This was a 24 trading day decline in Costco. I had another 24 trading day decline in Costco before it resumed the rally there. So I projected the timing, and I saw that we were coming into some key support at that 81, 82 area in Costco, at the same time that we were very similar to a time or 100% time projection of these prior declines. Okay, it doesn't happen on every single chart, but when you find it, it's well worth using. So we knew that we had time and price at that low, and our target was going to be 94.85. We met that target, and I haven't really looked at it recently, but once we met the target, I kind of took it off the radar. So we ended up having at least a $13 rally off of this setup that was based off of time and price parameters. And you can go back and check these for yourself. Okay, another thing I want to show you, Apple on a weekly chart. I've had to go back to a weekly chart when Apple started getting a little bit crazy. So when we started having these big, healthy declines, I basically wanted to compare those declines at or with some